Today we will be discussing the income statement for manufacturers. This video is a continuation of the previous video where we completed the manufacturing statement, and although it's not required, I would recommend that you watch that video first. Now, at this stage in your accounting career, you should be familiar with the income statement, and if not, I recommend that you check out the videos from Chapter 2 and Chapter 4 where we talk in more detail about the income statement. The income statement for a manufacturer isn't too different from the income statement you would see from a merchandiser. I have the template listed here. We start with sales and then we subtract the cost of goods sold, but unlike with a merchandiser, we have to do a little bit of a calculation to get the cost of goods sold, so that's why we have this blank space here. When we take the sales and subtract the cost of goods sold, we will get the gross profit. Then we need to list all of the operating expenses. Sometimes these are listed separately as selling expenses and general and administrative expenses, but in this case we are just going to list them as all operating expenses. Once we take the gross profit and we subtract the operating expenses, we get what's called the income before income taxes. Then we have to just subtract the income tax expense and we're done. We will have the net income. And if that number ended up being negative, we would have a net loss. So without any delay, let's get right into the example. Now we have all the information we should need over here on the left to complete this income statement, and a lot of this information was already used over here to create the manufacturing statement, which we did in the previous video. And any of the accounts that we didn't use in the manufacturing statement, we're going to end up using here in the income statement. So the very first thing we need is the sales. And we see right here that the sales revenue is $80,000. So we can copy that down right over here. Now the next thing we need to do is to calculate the cost of goods sold. That's not going to be one of the numbers listed over here. So I mentioned we're going to need to do a little calculation here to find the cost of goods sold. And to illustrate the process, I want to explore an example using a cookie jar. Now I know if you already watched the manufacturing statement video, you've already seen this example, but it doesn't hurt to have a little reinforcement. Let's say that I really like cookies. And sometimes I can't remember how many cookies that I ate in a day, but I always keep a record of how many cookies are in my cookie jar at the beginning and end of the day, as well as how many cookies that I purchased. Let's say that I begin the day with 4 cookies in the jar. We'll call that the beginning cookie balance. Let's also say that I purchased 3 cookies during the day, which got added to the jar. We'll call these cookies the cookie purchases. That would bring us up to 7 cookies in the jar, or our cookies available. Let's also say that there are only 5 cookies in the jar at the end of the day. We'll call that the ending cookie balance. If we assume that I'm the only one eating the cookies, could you figure out how many cookies that I ate? I'll give you a moment to think about your answer. It should be obvious, right? If I have 7 cookies available after my purchase and only 5 left at the end of the day, I ate, well, 2 cookies. Mathematically, that would be 7 minus 2 equals 5. Take a minute to make sure you understand this example, and then I'm going to change the labels. We want to find the cost of goods sold, which is the cost related to all the products sold in that period. So we replace the number of cookies eaten with the cost of goods sold. The beginning cookie balance turns into the beginning finished goods inventory. Let's assume that the good this company produces is chairs. We assume that the chairs that were finished in the beginning of the period will be sold in the period and therefore included in the cost of goods sold. I'm using the icon for 4 chairs here, but we would really be using the cost of those chairs. Next, the cookie purchases turn into the cost of goods manufactured. This is a really important point. The cost of goods manufactured is the amount of goods that got finished in that period. In our example, it looks like 3 additional chairs got finished in the period, to add to the 4 that were already finished. This gives us the total cost of goods available for sale, kind of like the total number of cookies in the cookie jar before anything was eaten. The company had 7 chairs that were available to be sold during the period, which we got by adding 4 and 3 together. But as of the end of the period, there will still be some chairs that didn't get sold, the ending finished goods, just like there are some cookies left at the end of the day. So just like the cookie case, how would we find the cost of goods sold? Well, if we started with 4 finished chairs, 3 more were completed, bringing us to a total of 7 available for sale, and we know there are 5 chairs left over at the end, that means, well, 7 minus 5 equals 2 chairs were sold in this period, and their cost would become the cost of goods sold. Now it makes a little bit more sense to have the cost of goods sold on the right-hand side of the equal sign, since that's what we're solving for. So we can switch the cost of goods sold and the ending finished goods inventory around. That works out algebraically. And there we go. We have the form of the cost of goods sold calculation that you will see on the income statement for manufacturers. Alright, we are back here with the income statement, and I've just pasted the labels that we were discussing here for the calculation of cost of goods sold. And I've highlighted some of the important accounts that we'll need over here on the left. So first we need the finished goods inventory beginning balance, which we can see right here is $3,100. So we can just type that in here. Then we have to add the cost of goods manufactured, and that's why this is kind of a continuation of the previous video where we created the manufacturing statement, because we're going to have to grab that number from there. So the cost of goods manufactured is $28,200. So we can type that in right here. And if we add those two numbers together, the finished goods beginning balance and the cost of goods manufactured, that gives us the cost of goods available for sale, which is $31,300. Then we have to subtract the finished goods inventory from December, which ends up being $3,400. And when we subtract those numbers, we get the cost of goods sold to be $27,900. Now the next step will be to take our sales and subtract the cost of goods sold. So that's $80,000 minus $27,900. And that gives us a gross profit of $52,100. And that's kind of like our profit when we only consider the one cost of cost of goods sold, which typically ends up being one of the largest costs for the company. Now next we need to fill in all of the operating expenses. So these are not going to include any of the production type expenses because those were included in the manufacturing statement and kind of got absorbed into cost of goods sold. So most of the other expenses that are related to operating, like I said before, could sometimes be denoted as either selling or general and administrative expenses, are going to be listed here. Now the key thing is make sure you don't list the income tax expense because that's going to be taken care of later. So I'm going to give you a minute to see if you can pull out the operating expenses from over here, and then I will show you the answer in just a moment. Alright, we are back with the operating expenses, which include advertising expense, depreciation expense on the office equipment, rent expense on the office space, sales salaries expense, and office salaries expense, which are all also highlighted over here on the left. And when we total all those up, we get $15,200 for the total operating expenses. Now the next thing we can do is we can take our gross profit, which was $52,100, and we can subtract the total operating expenses, and that will give us the income before income taxes. And then the only thing left to do is to list the income tax expense, which is right here for $10,620. And then when we take the income before income taxes and we subtract the income tax expense, we will get the net income of $26,280. And sometimes teachers will like to double underline that, so we can go ahead and do that. Alright, we are finished with the income statement for manufacturer. And the only really new thing here was the calculation of cost of goods sold. So as long as you have that, you should be good to go.